Hello, everyone, and welcome to our new Growth Spotlight episode where we take honest insights, real experiences across growth and entrepreneurship. I am Eren, founder of Next Big Thing. Sheena, I don't want to try to explain you. That's why I will be leaving the floor to you for your own introduction. Thanks so much for coming.
Thank you so much. And it's a pleasure to be here. I'm Sheena Pirbhai. I'm the founder and CEO of StressPoint Health. I'm a twice exited founder. So I built and sold 2 businesses before StressPoint. The first one was not in tech. It was a service business in finance. So it was sort of when tech startups were the thing. And then my second company was investing and incubating tech startups. We had a small angel fund. And now StressPoint Health, my third company, is a mental health tech startup. So we're innovating at the forefront of neuroscience, emotional regulation, and brain function and mental health. It's a really exciting opportunity for me now to bring my lived experience and the culmination of my career into my third company. And I think this will be my life's work, but never say never.
It is fascinating that you start with a service business in finance, then exit that, then go to a more kind of venture builder or investing type of things where you work with other startups. Now you are kind of what I feel is connecting the dots with your health tech startup. I'm really looking forward to your view on the questions today, because you can have different hats according to the questions. But before we go deeper to the questions, let's start getting know more about your current startup.
Yeah, of course. So StressPoint Health, we've built the world's first software solution that can regulate emotions in 20 minutes. And we've built a patented sound frequency technology and methodology to deliver that on people. So how we do that is we use specifically designed sound frequencies that help to regulate emotional responses. What does that mean? That sounds like a whole lot of jargon. Well, what does that really mean? Well, every day we process information. And first, we process information with our instinct. So you might walk into a situation and think, okay, am I safe? Is this a safe environment? Am I going to be attacked? Or is it going to feel wrong? And 9 times out of 10, it'll be fine. You and your body will think, okay, I'm safe, I'm fine. Then we move into the next way that you process information, which is emotionally. So then it's your emotional reactions that play a part. So how do I feel? Am I sad, angry, happy? Is this good? Neutral? Might not be anything. And the third response that comes, which is the slowest response actually, is logic and reasoning and thinking. And then you think about, okay, what am I going to do next? And these are sort of micro reactions that happen in a very short space of time. But what happens when you experience stress or anxiety or burnout is you don't have the ability to regulate that emotional response. So your emotions become very up and down. You might feel angry or you might feel sad, and these extremes of emotions that have come into play. And when I started to look at what I wanted to build in the mental health space for my third company, I really started to understand that most of the solutions in the market had focused on cognitive function. So they were digitizing things that already existed, like talk therapy or cognitive behavioral therapy, or all making, being able to access a therapist online. So it was all very much around this cognitive way the brain functions, but nothing in the emotional space. I had lived experience with PTSD. And what really unlocked my recovery was the combination of regulating my nervous system, regulating my emotions, and also that cognitive therapy. So that was really where things started. I started to notice this big gap in the market, this underserved population that needed to regulate their nervous system and regulate emotional responses. And it also underpins a lot of things: stress, anxiety, burnout, PTSD, chronic disease. A lot of things are underpinned by this. And that's really where I sort of started to focus. And sound became the medium by which we could deliver this. There's a lot of science around how sound influences the body and the brain. And that's really how it started and how it grew. And so now we're operational in the UK, in the UAE, we're expanding across the GCC. We're working not only in mental health pathways, but chronic disease pathways, in obesity, in other chronic diseases. We're starting in obesity, but we'll move into other chronic diseases as well, where really emotions are a cornerstone of this. And it's something that people don't really talk about. Emotional eating, stress-related eating, things that really influence your habits and your behaviors are actually all in the emotional part of your brain. And that's what we really want to help people to get better with. So our business model is B2B2C, and this was very intentional. We didn't want to go B2C, and there's a number of reasons for that. And we really worked a lot on our business model and really understanding what the best route to market for us would be. B2C in mental health is really crowded, and there's a lot of fatigue, I think, with the end user around what should they use, which one is beneficial for them, is it clinically validated, is it a wellness app? Like, it's very confusing for the end user. And I think this fatigue sort of leads to disengagement and leads to high churn for mental health apps. And the second reason that we didn't go D2C, aside from the fact that it's very expensive to acquire customers, D2C, is that we were novel. We were a novel therapy. We were something that people may not have heard of, they may not have understood. And we wanted to elevate our offering to be clinically validated and to be a software as a medical device, and to really, for people to really understand the power of the therapeutic effect that they could achieve with that. It had to come through healthcare providers. And we knew that our route to market would be through healthcare providers who would be recommending the app alongside treatment plans or alongside other things that this patient may need. And so that was the motivation and the reasoning behind B2B2C. The one-to-many model, number one. But number two, that we really think that the end user is still going to their trusted sources. And this was a really key idea for us, that where are people getting their information? What's most likely to get them engaged? And it was this idea of trusted sources. And in healthcare and in mental health particularly, those trusted sources, when we first started, and it's changed and evolved, which is really interesting. When we first started, was their healthcare provider, was their healthcare practitioner, was their GP or their primary care physician. Now it's a little bit more complicated with the advent of AI, ChatGPT. People are really trusting different sources, which creates a very interesting dynamic when you're trying to access that end user.
In the B2C space, we also give lots of time this suggestion. If you can find the right channel partner and create this harmony with the partner, then especially in your area, it's a very, very interesting area, because the user should trust the source, whether it's a healthcare.
Exactly.
Without trust, then they cannot buy these type of solutions. That's why,
Yeah.
B2B2C is making a lot of sense. And you have got these healthcare provider channel, and you are fast tracking the legal infrastructure or the country dynamics as well. Let's go a little bit deeper in terms of what worked and what didn't work. Let's start with which things had worked, then we will be also talking about which didn't.
So I think what worked for us, and it was and I think this is fundamental for anybody, was the product. When we had our first prototype and we were really playing with this idea of sound frequencies and how they impact the brain, and then we tested it on 22 patients, and the results were phenomenal. In one session, what we were able to achieve for them and on their scores, on their mental health scores, it was really profound. And we came away from that day of testing just thinking, wow, we have really developed something that is really powerful and it works. Because, when you're inventing something novel, there's always that moment where you're like, is this actually going to work? And is it actually going to do what we want it to do? And so that was really the sort of cornerstone of how we really progressed. And what really worked as we moved forward was continuing on that clinical validation, doing different types of research, different types of testing, larger groups, smaller groups, comparing it to meditation apps, comparing it to exercise. And we really managed to build a body of clinical evidence. And this was really key for us. It was something that I was very passionate about and very strict with the team on, that if we are going to bring a novel therapeutic to the market and we're going to convince people to use it, particularly healthcare providers, we have to be clinically validated. We have to have that research. So that was something that really clicked in the beginning, and I was very clear that that was an objective for us. So that was something that really worked. What's been, I would say, something in the middle that sort of works and doesn't work and kind of oscillates between the two is selling into, and this is going to sound really counterintuitive, but selling into mental health pathways. And the differences between the UK and the UAE. The UK healthcare is primarily governmental, for those that don't know. The NHS is the primary healthcare source. Only 5% is private. The rest is all government-funded healthcare. So if you want to commercialize in the UK within healthcare, you have to be selling into the NHS, which is very challenging, particularly for digital health solutions. So as we built this body of clinical evidence, now we were ready to commercialize, we couldn't really, it was very difficult to do it in the UK. So we had to look at other markets. I had a network in the UAE. I'd lived there before. My second company, I built it in the UAE. So that's when I really was exploring the UAE. But this was a different challenge. And this was, the challenge in the UAE was not against competitors, other mental health. It was against doing nothing. People were doing nothing. There was stigma associated with getting help for mental health. There was still culturally, it was a very sensitive area. So we were not competing against other mental health apps. We were competing against people doing nothing. And so this was very challenging. And what didn't work was trying to sell into mental health. And that was really, we were like, okay, well, if we're not going to sell into mental health, what are we going to do? You know, insurance doesn't really cover mental health here. That was a real kind of, oh God, okay, this is not working. We're trying to sell into mental health, or even corporates, trying to convince them that they needed to do something for mental health. But employees don't trust their employers. They don't trust the solutions that are provided by their employers because the stigma, the cultural elements are still quite profound. So that's when we had to look at, okay, now what do we do? How do we access it? And I met a doctor who was a functional medicine doctor. And he said to me, really look, when patients come to me, I really look at mind and body together. But the problem I have is that they come in for a physical health issue. The minute I suggest to them that part of their treatment plan has to be some mental health services, they just disappear. And he's like, you might be the missing link that I can tell them to go home and use Sphere and go home and use your product alongside the physical health treatment I'm doing, and that will unlock it. And that's where I had a light bulb moment that I was like, our route to servicing mental health is not through mental health, but through physical health and chronic disease. And that's how we sort of came around to, this is not working, but now we need to make something, we need to follow a different way. The product is the same. We know the end result is the same for patients, but just the way we access them changed.
Wow, this is the gold mine. Is in most of the time, I like the times that they call the aha moment. And I like for every startup, there's an aha moment. And for you, aha moment is crystal clear when you realize that pushing more to the mental health space by branding like that or trying to sell like that is pushing back, and finding it to the physical with the healthcare providers with clinically approval path is opening your doors. And when you think in the beginning, you have got a product that is solving specific problems, you can have several paths that you can go. But in the beginning, when you start with these clinically approved paths, then you realize, okay, there's something there. At the same time, the other gold mine is you are testing UK market, you are understanding the challenges, you are looking to other markets. It is a path to global growth. Like you are looking another market for a potential easier entry. At the same time, you are realizing that, okay, going to corporates, trying to sell to HR or employee branding teams is not making any sales, and making into a new package, let's say. Wow, fascinating. I really like, because in the early stages, most of the time, especially in the product market fit, lots of founders are losing their way, because finding a product that is solving a problem or some problems is important, but more important thing is finding the distribution channel and how you're going to distribute it. And
I also have an issue with product market fit. A lot of startups are told in, accelerators and programs, you've got to find product market fit. I would argue that actually it's not about product market fit. It's problem product fit. Is your product solving a problem, a real problem in the market? Because that's the only way that you're
Love that.
going to find your market. It's product problem fit, and that will show you your market. And I think that this framing is really important for startups as they start to really go to market. And it's like, well, if you do not solve a problem, if your solution does not make the status quo better or cheaper or faster, nobody is going to switch to your technology. And you can look at the best startups and the most profitable startups, Slack, Uber, the big names that you know. They were solving a problem that either people didn't know they had, and then immediately were like, oh my gosh, this is amazing. Or they genuinely had a problem, but they had no better solution until something came along. I mean, I think Slack's adoption was just probably the fastest in history in terms of their growth because they genuinely solved a problem of team collaboration. That to me is the market is, you can create your own market, and product market fit, that might be you creating it. But if you're not solving a problem, it won't happen. And that's, I think, really, really important.
I'm 100% with you in this one. And I like that. Problem product fit is making much more sense. Because most of the time, when you have a product that is solving a problem, then you can look further where it is a viable market there, because you can solve a problem. One of my initiatives in the past, one of the startups that I failed was solving a very important problem. But the thing is, in all over the world, there were around thousands of people who has got this problem. That means that there won't be any market. That's why you go, if you go from product to market directly, the missing link is which problem you are solving. And I 100% agree with you. Once you have got a problem, and once you are solving this problem, and if there are adequate number of people who are having this problem, and you can even create your own market, because creating a market is expensive, but it's not impossible. That's why, maybe most of the time we are seeing the failures that we are defining markets, we are finding products, and we are pushing our products to the markets without focusing on the problem. Yeah, I like I like that. Okay, checking my questions that I wrote before a meeting with you. We cover most of the growth related tactics. If we touch base to channels, because in your situation you are very niche, you are going to healthcare providers, you are already operating in the two country, most probably you are about to test new markets. When you think about sales and marketing channels, which channels are mostly working in your space, and how you approach them? Are you like testing and learning, or is what is working in the UK also working in the UA? Yeah, I've got lots of questions, but to be more concrete, which sales and marketing channels you have been using, and what are your insights on them?
Yeah, it's really interesting because, in healthcare, it doesn't work the same as B2B SaaS or B2C. And so the sort of testing model doesn't always work very well. But we have been doing a series of sprints. And we were doing a series of sprints on go-to-market, on value proposition, on pricing. And the number one thing that helped us through that was customer or potential customer or market feedback. So it wasn't about going and selling. It was just asking our potential customers or our existing customers about the things that they want, that they need. And, we've been in the market a while. So sometimes you forget to do that. You do a lot of it in the beginning. You do a lot of like market research and focus groups, and you do all of that kind of market research, but then you forget to go back to basics and double check. Has it changed? Has it evolved? Are there things that they want now that they didn't want before? What we learned from those sprints about what our target customer wants and needs, we could not have found through any LinkedIn campaign or any social media campaign or any marketing campaign. It was gold dust. Because they were honest, because we weren't selling them a product. We weren't talking about our product. We were just talking about their problems and what their pain points were and what they needed to address. And that really informed so much of our marketing materials and our pitching and our sales. I think the other thing that we cannot be underestimated is founder-led sales. If you are no matter what stage you are at, as a founder, you're always going to be leading sales, especially, a lot of people will have a technical founder and a non-technical founder. And one of the key things to that relationship is making sure one person has the ability to market and sell the business. Founder-led sales, that's, our biggest customers have come through conversations I've had, networks, people through my network, people where I've led things. That's not to say that my sales team can't close deals. Of course they can. But there are certain deals and a certain size and a certain type of person when you're dealing with very senior levels that want the founder there. So really, founder-led sales have been very important. But I think it's important when you're looking at building recurring revenue, you need to stratify your sales process. You need to have volume sales, so low value, high volume. Create that MMR engine, and then you can move that up. Founder-led sales will probably be enterprise level. Complex deals that are slow, sales cycles are longer, and they'll be, you'll be building at that level. But you need to have stratification of your sales process so that you can really start to build that engine and make it repeatable and make it work itself and keep churning and keep going and keep moving and keep building that sales and driving that growth. That's really essential. And I think, there is an element of testing a lot, and there's a lot of A/B testing, but it really depends in which industry you're in and what product you're developing. So I think some founders I've seen get very caught up in the whole A/B testing and testing this and testing that, which is fine for certain products. But there in certain areas, particularly healthcare, I think, and particularly B2B2C, there is no substitute for feedback from your actual potential customers.
100% agree. There was an article I forgot the name, but it was explaining selling to the flies versus selling to the elephants, like low ticket sales and high volume sales. And if you are a banner that people can use in the website, and if you can sell for £5 a month, then you need to go to the product-led growth path, because you cannot go and sell door to door, or you cannot try to build trust with the human connection. That's why all of your marketing material, all of your website brand, everything is backing your trust. But at the end of the day, the decision is £5 per month decision. That's a low involvement. That's why it can be decided easily. But when it comes to
Exactly
selling to the elephants, like the high volume sales, especially in your area, like more, let's say, in a health related area, when you have got a channel partner which is also in a sensitive area, because in most of the country it's highly regulated areas, then it's not like trying to sell the SaaS banner, trying to test and learn with the campaigns. At the end of the day, you need to build that trust, and I'm 100% with you with that founder-led sales approach, because even at the scale-ups, I still see that founder should be leading most of the high-volume sales. It can be an enterprise customer, or it can be a investor. Also agree that even founder is selling, at the end of the day, that there should be a structure, because this structure will be a path to scale your sales operations when you are growing, when you are hiring people. If everything is inside the founder's head, and that is a problem for the
exactly
upcoming stages. Thinking about these founder-led sales, what I feel is, after this AI, after this, let's say, abundance, like there's everything everywhere. Like distribution channels are overwhelmed. When I'm checking my LinkedIn, coming lots of AI slop. When I check my emails, the same thing. Even the calls, I'm receiving calls that the AI is speaking to me. And what I feel is, trust is becoming much more important with the AI. That's why this founder-led sales approach is becoming much more important. And when it comes to this AI domain, Sheena, thinking about your startup, how you are positioning your startup in this new AI era, both in terms of the product itself, how you are enabling your product, at the same time, how you approach this distribution abundance.
It's a great question. And I'm going to give you an example of a 16-year-old girl that I mentor who's building an app, and she's building this incredible app. She noticed a problem in, her life. in amongst her family, and she's built an app to solve it. It's honestly brilliant. And she and I had a conversation, and I said, okay, you don't have any AI in the app. And she very astutely, very smartly said to me, well, I don't need it. For what I'm building, I don't think AI is an added value to the app. And it was so
Love
pertinent
that.
and so bright. And this is my mantra with AI. Just because it's trendy and just because it's a zeitgeist of the moment, if it doesn't add value to your product, then you don't need to add it into your product. But this is particularly true in healthcare. And I think it's important to look at AI in the lens of where we sit in the world. You and I and most of the people who will be listening to this, we're in the top 5% of the population, where we have high-speed internet, we have the money to pay for, these AI tools, and we can use it to make our lives more efficient. But the majority of people do not have that privilege. And for them, AI is not something that's in their daily life. Now, add into healthcare, there is serious distrust around AI. Yes, there's a lot of hype around, people going to certain AI platforms for their mental health and using it as a therapist. It's a small microcosm of the global population. Most people cannot access a doctor, let alone have the privilege of using AI for their healthcare. So I think it's important to note that whilst there's so much hype around AI in Western markets and in certain markets, it's not representative of where the global population is and where they sit with AI. So there's no need to put AI into something unless it's really enhancing your product. And it's really, those features are really important. For us, AI has made a huge impact on efficiency, my time as a founder. Certain things have just become quicker, better, more efficient because of AI tools that I have. It makes me as a founder operate more leanly. I don't need to build a big team because there are processes and things that I can use AI for that I might have employed someone previously. That's of course a double-edged sword because, AI will put people out of jobs. But for a startup like mine, it means I can continue to run lean and quick and efficiently. So what do I think overall? I think AI makes humans more efficient. It optimizes our time and optimizes our efficiency. But I don't think it's necessarily, particularly in healthcare, a replacement or a necessary addition unless it's really doing something extra for your product.
I feel like we switch back from AI is trendy to I don't trust AI or AI is slop in a, I don't know, like 6 months time. And first of all, questioning, is AI needed in your startup? I love that 16-year-old young entrepreneur. It's a great example because
Yeah,
if I ask my 11 years old son, he will probably say a similar thing because for them, they are kind of AI natives. They're born into the AI. They
exactly.
live with the AI. It's not like they are trying to put AI into their own product or own marketing and
Yeah,
sales assets. If you don't need AI in terms of efficiency or effectiveness, why to push it? But I also can understand that in the global investment appetite, let's say, if you are an AI startup, your multipliers are higher. If you are an AI startup, you can find funds easily. That's why
yeah,
they are kind of putting salt. It's like kind of putting some AI to the product and trying to raise funds. I can understand. But at the end of the day, what I believe is the number of buyers in the world in most of the categories are the same. That doesn't mean that the AI can increase the number of emails you send, the number of content you create, 1x. At the end of the decision maker will decide, and it is limited. That's why trying to be still unique, but using the AI in the most efficient way. I also agree that there will be a huge change in the type of employment.
yeah,
I'm not sure whether it will go down or up, but the type of employment will change drastically because
yeah,
now I can easily simulate that Sheena can be a one-person billion-dollar company with the help of AI. Without AI,
yeah,
it was impossible, but now it
yeah.
is possible. Do you think is it doable, like one-person billion-dollar company? Honestly,
Honestly, no. And the
okay.
reason might surprise you. Being a founder is an incredibly lonely journey as it is, and it's very tough. And I think having humans around you and a team around you, what that gives you cannot be replaced by AI. So yes, technically you could build $1 billion company. Would you as a founder be at your best potentially? That's where I have the question mark, because with all of that responsibility landing on your hands, on your head, I think just sometimes having a team around you to bounce ideas off, let off steam with, to sense check, fact check, just in general, human to human contact. At the end of the day, what makes us human is our relationships. And I think that it's unhealthy for a solo founder to get lost within his AI team or her AI team and lose that human contact. That's the reason why I don't think it's possible for the long term.
No, it makes perfect sense, because if you are talking about a human founder, would like to have team members at some point, just to sake of it, just to like share it with the other people as well. That
Yeah.
doesn't mean that he or she needs it. The thing is now, everybody is talking about like $1 billion companies with one person. It's possible. Yeah, I also believe possible. But will it be the case at human side? The number of people you need won't be thousands of people. I feel like the new era, we will have very strong teams, like 5-10 people teams, but very strong.
Absolutely. And I think that's great. I think, the efficiency that it'll breed, I think, there was a lot of, you'd get this cycle that startups, and particularly in the tech world, were on. You'd raise, you'd get VC money, you'd expand your team, you'd increase your burn, you'd raise again, and this cycle started. Now I think there is no excuse for being efficient. You don't necessarily need to get on, unless you're really building something, unless your infrastructure costs of building are high. You don't need to keep raising to build your team. Now you can really use AI to make that more efficient. So I think those sort of very fast cycles of fundraising, I think will change and evolve. And I think that's a good thing, because it's still important. And I think one of the things that AI has sort of highlighted is the money flowing into AI is highlighted, that you can't forget fundamentals. You might layer on AI. I think there was a sneaker company recently that they were making shoes, and then they said they were an AI. Yeah. And then suddenly they got this, huge valuation. I think, those sorts of things are anomalies, but you can't forget the fundamentals. What are you building your business on? What is the value within your business? And I think that's but healthcare went through that correction post-COVID. Post-COVID, a lot of money flowed into healthcare. Everybody was all about healthcare. And then the huge correction came where people realized that they'd invested, and there were some big failures that happened within healthcare that had been, that had reached unicorn status because the fundamentals were just not there. They weren't paying customers. There wasn't enough revenue to sustain these huge teams, these huge amounts of money that had flowed in. And at some point, that correction happened. So I think no matter what the hype and the buzz, if your fundamentals of your business are solid, then you'll do well.
Agreed. I'm a little bit conscious about time as well. That's why I will be going my last topic. That is, I always like to talk about the cultural differences between countries. It's one of the areas that motivate me when I'm doing my business, or I'm trying to help other entrepreneurs as well, because I always find fascinating that doing business in different countries are sometimes like apples and oranges. And I would like to compare the UK and UAE ecosystem with you, Sheena. You have worked in both of them for several years. Still, you are doing business. Let's talk about some cultural differences, because I'm sure that our audience will be expecting to enter both markets, because UK and UAE are the top markets when we look at the data that the startups would like to enter. When you compare the UK and UAE, what are the main differences, or what are things that you want to say the entrepreneurs who would like to enter these both markets?
Yeah, I think one of the fundamental differences is that in the UAE, everything still is about relationships. You have to be on the ground here, meeting people in person and building relationships. A lot is done on trust, and you have to put that work in the UAE. In the UK, I think that most of what we do in the UK, we do online. That was definitely post-COVID. Everything moved online. It's one of the reasons why I moved to the UAE, because I could service the UK market online, but I couldn't service the UAE market online. The UAE market is very much still in person and building those relationships. I think that's the fundamental difference between the two markets in general, which is industry agnostic, that if you want to build and sell and grow in the UAE, you have to be here. And I think that that's the other big difference, is that now the market in the UAE is moving towards, you need to set up here, you need to have an entity here, be licensed here, and service this market from an entity, a local entity. Before, you could do a hybrid sort of version where you could take a local partner and they could, help you do that. Now they really want people to invest in the region. They want people to be, and I think that's changed the ecosystem for the better, because now there's a buzzing startup ecosystem. There's a lot of government support. There's a lot of visibility for you in different sectors. There's obviously funding, but that funding is going towards some startups that are here. And startups that are building for this market. So what is super exciting about the UAE is that ecosystem. The startup tech ecosystem has changed so much in the last 10 years, and it's a really great place to be. I think in the UK, it's been slightly different. I think the challenges around the tax environment, the change in government over the last few years, also post-COVID, the UK has still struggled a bit post-COVID. So the support and ecosystem around startups has definitely felt harder and smaller, and funding lighter. I think I've always felt in the UK that you need to have a lot of traction and have a lot of revenue to really get the attention of investors and support, which is a real shame because there's a lot of talent. And what I'm seeing in the UK is that people are doing a lot of R&D there. They're testing, validating, getting their product to a place where they can go to market, but then not going to market in the UK, particularly in healthcare, but I think in other industries as well. So the macro environment in the UK is not as supportive or as attractive for startups, I think, than compared to the UAE. But of course, the market in the UK is bigger. So, you are selling into a much bigger market, a slightly more mature market. But then the UAE is the gateway to the rest of the GCC. So then you have the bigger markets like Egypt, like Saudi Arabia. These are the bigger markets that the UAE can be a gateway to. So, there's pros and cons of each market, and each market brings a different perspective, a different way of growing. But I think the fundamental key difference is the relationship piece. UAE, you've got to be here, you've got to be meeting people in person, attending events, and building those relationships and trust.
These are gold mines that's coming from you for the entrepreneurs who would like to explore both markets, because every entrepreneur will have his or her own experience, but from the ones who did it before, getting these feedbacks and insights I find highly valuable. And I recently visited Dubai and Abu Dhabi, and I understand what you mean with these people are trying to build, and there is a kind of buzz in the city, especially in Dubai, and that is because people are there to build something, and when entire ecosystem trying to build something, it is kind of giving this 2 + 2 = 5 equation there. I felt it even in 1 week time, and also especially accessing to the Gulf region, other markets. I wish we can continue, but I need to stop. In the future, if you are up for it, we can have other episodes as well, because
Definitely, always.
I really enjoy the chat that we had today. Sheena, thanks so much. It was a lovely episode. Do you have any closing remarks?
No, thank you so much for having me. And I'm, my LinkedIn is always open if anyone wants to DM me and get any advice or ask anything or just, chat. I'm always happy to help the next generation of entrepreneurs coming up. It's not an easy journey, but I believe it's totally worth it. So I'm always happy to help.
Thanks so much. Yeah, it's a roller coaster journey for the entrepreneurs. That's why take as much help as possible, especially from the other peer entrepreneurs. And see you in the next episode.